Hello and namaskar viewers, I am Sanjeev Pandya welcoming you this week's edition of the Tax Talk. Yes, you heard it right, the Tax Talk. Even though tax season is over, officially it's over, April 15th is the deadline, and for some companies it's March 15th deadline. So now the tax season is over. Only the individuals who file the extension, they will have to catch up with it depending upon their tax return, September or October 15th, and that's going to be it. But now the official tax season is over, but we still have some tax information for you in this show. It's going to be very interesting, and the show is brought to you by SAI CPA Services, a full-fledged professional accounting firm located in the state of New Jersey, multiple locations, but they can assist you, help you in anywhere in the USA. They can be reached at 908-380-6876 or visit saicpaservices.com to book in-person appointment, over the phone, over the Zoom. Anything and everything is possible, just to make sure that after you file an extension, your tax return is filed correctly. In this kind of situation, after April 15, what happens is many times individuals go and file extension because they're not sure if they want to go back to the same CPA, or if they want to have another accountant, or if they need more time to look into their receipts and income and expenses to see whether they're getting refund or not refund. So there are hundreds of thousands of taxpayers, they are in that situation, and for them I have an advice that do contact SAI CPA Services because they believe in doing taxes right. And with that note, I'd like to welcome Mr. Ajay Kumar of SAI CPA Services to guide us and to educate us when it comes to personal or business taxes in the show. Ajay, welcome to the show.
Thank you, Sanjay. Thank you for the kind introduction.
You're very welcome. And now the tax season is officially over, but the work never gets over. Work always continues, right?
Absolutely, and it's a blessing. I wish the work remains, work continues, but being the tax season is over, the deadlines are not there. So it's not as pressing that it has to happen today.
All right.
So that's the blessing. So I'm glad the tax season is over, and I'm glad I'm busy.
All right, very good. Stay busy, and then you take time out to be in the show. That we appreciate it. Now let's look into it. After the tax season, what can we talk about taxes? Here we got very interesting information for you. Once again brought to you by SAI CPA Services, is that we're going to find out how many returns were filed this year and what's in it compared to the last year. How many people really got direct deposit refund, and then the checks, and what was the average refund between this year and the next year. So we're going to give you a lot more information. So in this segment, what we have done is that tax season at a glance. So while we start with this segment, the number one question I have for Mr. Ajay is that the number of tax returns filed this year, was it higher than the last year or lower than the last year?
Well, it was slightly higher than last year. In total, a lot more people filed the taxes, and we have seen this upward trend every year slightly, and it's mainly because of the population, because of the increased wealth that we have. A lot of people who did not qualify to
or young generation became qualified to file a tax return.
Of course, they make more money.
Yes.
Now they have to file the taxes, and there's a population factor as well. But in total, in general, more people filed the taxes in 2024 compared to 2023.
All right. So that means more money coming to IRS, Uncle
Well,
Sam.
yes, it could be either way. More money coming to IRS, more processing, more refunds. So it has an impact on every single section.
And again, we're just talking right now about the individual tax returns. We're not even talking about corporate tax returns, So right now we're talking about individual tax returns. So when we say tax season at a glance, obviously you said that there are more tax returns filed this year. What about standard deduction and the child tax credit and AGI
Absolutely.
and everything?
So there are a lot of positive things when we look at the tax season, look back in last 3 months, 3.5 months, and see what went right, what went wrong, what could have been done better. So we'll discuss a few things. What were the positive things for the tax season this year, Sanjeev ji? What were the negative things, what could have been done better. We'll also talk about a lot of statistics, how many people filed, how many direct deposit, how much refund, how much average. Then we'll talk about some interesting stories from the tax season, and the learnings, more importantly, the learnings from those tax stories. So starting with the standard deduction and the child tax credit, as you mentioned. So in 2023, and we are talking about the taxes that we filed in 2023 for the year 2022. And when we say 2024, we are trying to say the taxes that we filed in 2024 for the year 2023. So in 2023, the standard deduction was 25,900, which increased to 27,700 for the taxes that we filed in 2024. The refundable portion, the child tax credit remained same, $2,000 per child for qualified child, but the refundable portion increased from $1,500 to $1,600. Similarly, the 401k amount increased from 20,500 to 22,500 per person. So there were a lot of things that changed. In total, there were not substantial changes, and thank goodness. We did not have the changes, a lot changes compared to the prior year. So all these things were mostly inflation related, mostly changes every year. So it was business as usual when it comes to the positive things. When it comes to the negative thing, IRS was still extremely busy. By the way, IRS hired 5,000 new operators to answer the calls. So even though the call processing time was much lesser compared to the prior year, but still there were long waits with the IRS, and I think as much as they're trying hard, there is still a long way to go. It still takes a lot of time. It's still extremely frustrating for a general person, for a taxpayer to coordinate with the IRS to get the right information from the IRS.
All right. So now, another news, now IRS hired more than 5,000 individuals to answer the calls.
Absolutely.
Now let's
additional people.
Huh?
Additional.
People. Okay, now let's make it clear for our viewers. These are the individuals, they sit in the US. It's not like they have this individual sitting outside USA.
Absolutely.
Where when you call them, you never know your call is going to be routed to Europe or South Asia or Africa or anywhere else.
Absolutely.
All right, so these are the US based. So IRS is really making sure that the taxpayers get help in any way that they can get the help, because many taxpayers, they really can't understand this thing and whatnot. Anyway, so after this basic information, let's talk about retirement accounts, 401 and 401b and 403.
Absolutely. So a lot of changes were there. So 401k account, the limit used to be prior year 20,500 per person pre-tax limit, which was increased to 22,500. If you are over 50, you had another 7,500 as opposed to 6,500. So if you are over 50, the limit was $30,000 pre-tax limit that you could take out of your payroll, not pay the taxes, and have the money go to the 401k. So it was extremely good. The best part was the rules did not change in general. The limits that we are talking about are all inflation related standard limits. In total, 401k that was deductible last year was deductible this year as well. So the rules, the tax laws did not change.
All right, e-filing, one of the most common things. Accountants wants it that way because it's easy for them, and the taxpayers also prefers that way because they don't have to worry about mailing the tax return.
Absolutely.
And putting a check in the mail.
And it's good for IRS as well. When you are paper filing your taxes, the reason it takes forever to get processed because somebody over there has to manually enter all the information from your tax return to the system. When you are e-filing it, it becomes easier for the IRS to issue you the refund, to give you the money, and it takes care of a lot of errors. Addition error, subtraction error, computation error. When you are doing paper filing, then you are taking
it makes it easier.
It makes it easier.
All right, so that's the basic information for you. Tax season at a glance, year 2023. Tax season is now over, but the work continues. Now we've actually, SAI CPA Services, they have put in a very detailed and interesting table in the several categories with the numbers and percentages. You're definitely going to enjoy it. You will see it on the screen. I like to begin with this 2024 tax filing statistics. Now we're going to go into the refunds category. That there's the year 2023, 2024 comparison of those 2 years and the percentage wise change plus or minus. Total number of refunds.
So the table that you see on the screen talks about the refund, and please remember this table was updated on April 10th. So these numbers are a little bit outdated, 1 week outdated. So you will see the real number published pretty soon in next couple of weeks. These are the numbers that IRS published as of April 10th. So 66.8 million people in 2024 got the refund, which is slightly lesser than the prior year.
Which was 69.1.
Which was
so 3.3% minus negative.
Absolutely.
So does that mean that in IRS's P&L and financial statement will we see 3.3% increase in the revenue?
I'm not sure yet. We have one more weeks of information that we have to factor in.
Okay, let's go to the next category. Total amount refunded.
So $201 billion were refunded in total to these people. The average refund per person was $3,000, $3,011 to be exact. If you look at the average statistics per person. So if you got the refund, if your refund is $3,000, that's the average for everybody. So in total, 63.4 million people requested the direct deposit. So if you go back, 66.8 million people got the refund. So out of the total, let's say 100 million returns, 101 million returns that were filed, and we are talking about the individuals only, not business. Out of 101 million returns that were filed, 66.8 million people got the refund. Out of 66.8 million people who got the refund, 63.4 million people chose to get the direct deposit. So the total amount refunded was 201 billion. Out of 201 billion, 196
almost
billion,
196 billion.
Almost 196 billion was refunded in electronic direct deposit. So if you look at only the direct deposit, the average was $3,088. In total, including the checks and everything, the average was $3,011.
Okay.
So this is where we are talking about the refund for the individuals in this table. If you look at the next table that we have put together for your convenience, here we are talking about the number of returns that were filed at the IRS. Again, this data is up until April 10th only. The full table will be released in the next couple of weeks by IRS. So in total, 101.8 million individuals filed their taxes. 101.8 million, out of which almost 100 million were processed. So IRS did a fairly good job this year. Almost all the returns were processed, and I bet the remaining 1 million that were not processed are the ones that paper filed. Most electronically filed returns are processed within 3 to 5 business days. So out of 101.8 million, 98 million were electronically filed.
Now, these last two categories I'm interested about. E-filing returns received from tax professionals like SAI CPA services.
Absolutely.
Unchanged, almost.
Yeah, absolutely. 53.15.
And e-filing returns received from self-prepared. There are people who use the tax software to file their own tax returns, right? And that actually went up.
Absolutely, absolutely. That tells you the economic of the country, what type of people are growing in the economy. So if you see the people who goes to the professional, but you have to remember this may be a little bit skewed. A lot of smaller CPA companies, they don't put their own name. They still put it as self-prepared or the taxpayer's name, which is not legally the right thing to do. But based on the table, number of tax returns that went through the professionals, went through the CPAs, the accountants, remains unchanged.
All right. So he, being a CPA and of course part of SAI CPA services, he's defending his fellow tax professionals to say that many people, they don't write their name. But business is always good in the CPA firms. When the CPA firm, when they know to do their taxes right, SAI CPA services is one of them because they have trained and knowledgeable CPAs on hand to assist you. With that note, we come to the end of the first part of this tax show after the tax season. In the second part, we get more interesting information coming up for you. Stay with us.
Did you know 53.5 million people went through the CPA to get their taxes filed? So out of 101 million taxes that were filed, almost 53% people use the CPA help. If you are one of them, good luck. Thank you. We appreciate your business, and rest assured your work is done right.
And Ajay didn't complete the whole thing. What he's saying is next year, please make sure that you go to CPS to have your taxes done right. So at least you won't have to worry about IRS audit, because individuals who file the tax return on their own, there's nothing wrong with it. And there are tax softwares, you can do it. But chances are that you may overlook something which could be in your favor or against you. And that's why you need a professional CPA. So it's a thrill to file taxes on your own because, you know, you take a pride. I did my taxes on my own and I'm so happy about it. But just be very careful. And for that matter, any tax advice for corporate or business taxes, SAI CPA services Just a one phone call away, 908-380-6876. And their website is SAICPAservices.com. Their trained, knowledgeable CPAs on hand can assist you. Now, SAI CPA Services, they file hundreds of thousands of tax returns. They help out individuals throughout the nation. So when they file so many tax returns, they also get some interesting tax returns and interesting stories and very interesting excuses from the taxpayers, what they did, what they not did, and they end up fixing their problem. And that's what we're going to talk about in this second segment. It's called Interested Tax Stories.
Absolutely, Sanjeev ji. So going back to how many people file the taxes electronically through a professional and how many people file the taxes themselves using a software, our first story, interesting tax story, real story from the last season, from the last month. We have a new client who was asking us to file the taxes, who used to use a software himself to file the taxes, and he was being audited. So we asked, why are you being audited? The client says he has medical expenses of $70,000 that he claimed for 2022 taxes. And he has receipts for everything. The client was swearing that these expenses are real. And we believed him. We said, show us the receipt. These expenses were for the parents who lives in India and not part of his return. The parents do not have the social security number. So this guy, nice guy, gentleman, he was sending money to India for the parents' medical treatment and claimed all those expenses because he thought they were his family. And I agree with him, they were his family, but the government did not. In order for your medical expenses to be deductible, first they have to be 7.5%, in excess of 7.5% of AGI. Second, the family is what's claimed on your tax return. You, your wife, and your children under certain age. The parents who do not have social security number, who do not even live in this country, per the tax return, their medical expenses are not deductible. So when you are doing your taxes yourself, just be careful. Make sure you understand the rule properly before you putting in the numbers.
I have a question.
Please.
So the taxpayer said that he spent $70,000 for parents living in India for the medical bills. No problem, nothing wrong with it. Supposedly, if his parents came to USA sometime in February of the year, right? And they were just visiting and everything. And they were going to be here, let's say 6 months or so. They ended up staying entire year because they became sick and they had medical expenses and everything. And if the taxpayer spent same kind of money here, 70,000, because they came from US, no insurance and everything, whatever the reason is. But they stayed here, they got better at the end of the year, they went back to India. Now that amount was spent here in the US, legitimately they were in the US. Can he have deducted?
As long as the parents are claimed as dependent.
No. It happened within a year. They came in February and they left in December.
So if
and no SS number, no.
If you are paying money to a family member in US, for a family member, for friends, for your dog, they are part of your family. Is it claimable? No.
Not even,
unless,
not even 5, 10, 20%.
Zero. Unless they have a social security number or ITIN number and part of your tax return. We get the situation with the dogs, with the cats, with the pets every year. My dog's medical insurance, my dog's medical expenses. And we politely ask, does your dog have a social security number? If not, it's not claimable.
Dogs have ID numbers. When you register in the township and the county, dogs have ID
count.
numbers.
It does not count, unfortunately.
They are not 9-digit numbers.
No, it's not. It's not a social security number. So unless you have the family members on your tax return, their medical expenses you cannot claim on your schedule.
Interesting. All right, let's move on quickly. Another interesting story. These are the stories that SAI CPA Services they got during the year and they're sharing with us. Improper or missed record keeping, very common one.
It's very, very common.
Yes.
So we get this client who is giving a lot of money as donation, and he believes in this theory. They give 10% of their money, and we say, well, show us the receipt, please. So, well, I don't have the receipt. I was putting the money into hundi. I gave some money to Panditji. I gave some money to the temple. If the need be, I can get you the receipt. And I said, this is not how the law works. The receipts have to be contemporaneous in nature. Putting the money in the hundi does not count as a donation, unfortunately. Giving the money to the Panditji is not donation. The person you are giving the money, the entity you are giving the money has to be a 501c3, charitable organization. Mandir, temple is 501c3. Panditji is not 501c3. And you don't have a proper record of the hundi money. So you have to have a contemporaneous receipt. What it means is you have to have the receipt in your hand at that time of filing the taxes, saying that if the need be, I can arrange it. That's not the excuse. That does not work. That's
All
not
right.
claimable expense.
So when Ajay is referring hundi, he means donation box.
Donation box.
Because in when you go to temple, there's always a donation box. Right by God's idols and everywhere you see donation
Thank
box.
you,
And a lot of people end up donating some money over there. They prefer better. I guess I can understand their mentality. Sometimes they don't want to go to the office and say, let me have a receipt.
Either way.
But some people who are
people
very,
wants
very
to keep-
peculiar, they will get the
They want
receipt.
to keep it anonymous sometimes.
But don't they allow certain percentage to say, okay, I donated in the church and in the temple, but no receipt?
There is no such number. There is no. That's why we are giving you the standard deduction. That's why you have up to 27,700 for a married filing joint tax return. So you don't have to worry about
The
these
receipts.
small donations,
Yeah.
these small expenses, these small deduction. We are giving you a standard deduction. But if you want to itemize it, then you better have the receipts.
Okay. All right. Speaking of receipts, so that's the number one thing that for record keeping, you must keep receipts when you are doing so many things like that. Let's go to IRA contributions.
Absolutely. So another example, smart guy, IT consultant, he contributed money to the Roth IRA because that's the right thing to do in his mind. He does it every year. New client came to us, we are doing the taxes, and then towards the end he says, I did contribute money to the Roth IRA. I said, you have more than 218,000 of income as a married filing joint. Once you have more than 218,000 of income, it starts to phase out. At 228,000, you don't qualify for Roth IRA contribution. So in his case, the contribution was in excess to the limit. He was not allowed to contribute. It created a situation when it became taxable income for him for the next year. So you have to make sure when you contribute to these retirement accounts, these IRA accounts, these 401k accounts, these SEP accounts, these qualified benefit accounts, make sure you keep the accountant in the loop. The CPA will be happy to have this conversation with you. Spend some time with the CPA, with your accountant to make sure you are not doing something that you don't qualify for.
All right. So in a layman's language, let's talk about this individual. Made more than 218,000 or 228,000 married filing jointly and put money in IRA, and he didn't know the limit, whether allowed or not. So did he send money to IRA? Even though you said that he ended up paying tax, right? So money is in IRA account. He couldn't get it back.
No, money will be refunded.
Money will be refunded. Okay, all right. Okay.
So there are ways to handle it. There are ways to handle the excess contribution.
Correct.
You can get the money back and the difference could be taxable for you.
Yes.
But the point here is when you are contributing money to your retirement accounts, make sure you keep your accountant in the loop. Especially when you have these business plans like 401k, 403b, 457, defined benefit, defined contribution, SAP, make sure your accountant is kept in the loop.
Okay, all right. And then last one, but also very important one, non-receipt of refunds.
Absolutely. So very, very interesting story. The client came to us, we are doing the taxes for the client. We say, congratulations, you have $7,000 of refund. And the client says, I never received money from the IRS. Why? We look at his return. You should have received some money last year and the year prior. So we are looking at his last 2 years' taxes. Long story short, we finished the taxes, he signed, we filed the taxes. He said, don't worry about it. If you don't have the refund in 4 weeks, you let us know. After he left, after a day or two, the tax return got bounced back from IRS that the social security number does not match with the name. Now we are calling IRS to find out. Long story short, we found out after the marriage, the wife changed the last name, so with the Social Security Administration. So we get the new down. Now we go back to the client, got the last name updated. In the meantime, we called IRS to find out why the return is not being accepted. With all this research, we found out last 2 years, 21 and 22, he was supposed to get the refund, but the return was never filed. Return was never accepted by IRS. So even though they filed the return through a different CPA, but the return got rejected and the CPA never told them. And then we had to file their 21 and 22 as well, along with 2023.
Is the wife to be blamed for this?
I'm not sure. Everybody takes the blame. I mean, the couple takes the blame. They should have followed up. They should have called IRS. The accountant takes the blame. When the return was rejected, the accountant should have told them as we did. So everybody is at fault. But the point here is, Your refund is your responsibility. Your tax return is your responsibility. If you are expecting a refund, you don't have the refund, go to IRS website. There's a link over there. Where is my refund? Or call IRS 1-800-829-1040, or find out through your accountant. Make sure it's your responsibility to do the research to get your refund. If you owe the money, you pay the money. If you are expecting a refund, make sure you get it.
But AJ, that's a secondary thing that you can go and find out the status of your refund and whatnot. The most important thing, something to learn from this story, is following. Is that social security number, as you know, is the most important ID number in this country. If your wife, a spouse rather, changes last name or whatever reason, SS number changes, you must let the tax accountant, the CPAs,
Absolutely.
professionals, everywhere know that SS number has changed. That is taxpayers' responsibility.
It's the last name that changed in this case. The SSN remains same.
Yeah.
But when you file the taxes, unless the SSN number and the last name
matches. So then you let the
Exactly.
Everybody know. But anyway, because you have to let the insurance company know, and then IRS know, and everybody
Absolutely.
once you change
Absolutely.
it. That's the thing. All right. So with that note, we almost come to an end of this tax at a glance and interesting tax stories in this tax talk show. But AJ has a very interesting quote for the day. Let's hear it.
Absolutely. Today's quote, and it's not political. I want to keep it tax related. But today's quote is, one person's hero is another person's terrorist. Think about it. So we are happy to the right thing for you. Make sure in your shoes, whatever you're doing is right in your mind. You don't have to be right for everybody. As long as it's right for you, as long as it's right in your mind, it's okay for you.
All right, very well. Thank you so very much. In that case, I just want to say I am the hero. There's no terrorist in here. With that note, we come to an end of the Tax Talk Show. Mr. AJ, another hero. Thank you so very much for your time. Thank you for your guidance. And with that note, I am Sanjeev Pandya. Wishing you all happy and smiley days there. You got refund. Go out and spend the money. Go to malls, shopping, buy a car, whatever you can. And then after, continue to work.